financial inclusion. Okay, right, good. Anyway, good attempt. So financial inclusion means including all. Sir, who are all the financially excluded? Even the students, you are excluded. You may have the bank account, but what you are doing? Just depositing 1,000 rupees or 2,000 and withdrawing immediately. You are not doing, you are not transacting more than just depositing a few hundred or few thousand and withdrawing the same amount. That's all. You are not financially included. Financially included means you have to avail the product or service being offered by the bank. Majority of the product, say for example 90% of the or 70% of the product or services being offered by the bank. The bank. You are not approaching the private money lender to fulfill your monetary benefit, money requirement. So, as a student or the poor people or the person, they don't have the bank account, they are financially excluded. Even the government of India, I think the Prime Minister Narendra Modi, he has launched this. The previous speaker also told Jan Dhan. Nearly 70% of the people, they have opened the bank account. For that, zero payment. No need to maintain any balance in the account. So the purpose is don't go to the private players to fulfill the money requirement. If you are going to the private person, definitely you cannot survive or you cannot come up in your life. They will cheat. Even the private money lender, they are approaching the bank person to borrow the money and they are lending money to the private. So the financial inclusion metrics. And I am coming to the point. These are the opportunities and challenges of cashless society. First, opportunities and challenges, economic impact. For cash society, we have to produce or we have to manufacture the currency, coin, and we have to supply. This we can save. And instant transaction. Immediately you can transact, buy or sell. And money also, wherever you want to send, it reach immediately. And what are the opportunities, what are the challenges? Economic impact. Financial inclusion. So already I have told you, the purpose of financial inclusion, the government of India, they wanted every people has to open the account, avail all the product, all the services being offered, and become a self-sufficient person. And then security and privacy. And then impact on small business, technology and infrastructure. What are the opportunities and challenges? We will discuss one by one. Let us take economic impact. First, opportunities. Yes, economic impact. So these are the opportunities. Increase the economic efficiency. We can save the money. So for example, for a 10 rupee coin, the production cost is more than 10 rupees. The production cost is for 1 rupee coin, 2 rupees coin, 10 rupees coin. The government of India, they are spending more than 10 rupees. We can save and use that amount for the economic development of the country. So increase economic efficiency, enhance financial inclusion, reduction and economic growth. We'll discuss one by one. So increase economic efficiency. Already I have told you, reduce the cost of printing and handling cash. Use that money for the economic development. And then second one, faster transaction. Digital payments reduce the time spent on transaction, improving overall efficiency. Instantly you can send the money. In turn, they can use that money for their development. So, faster transaction. And then tax collection. Tax evasion is not possible in case if you are transacting through internet or net banking or, for example, cashless society. Suppose if you are using cash, the trader, they are trying to avoid the payment of tax to the government. So, the schemeless tax collection is possible. Tax evasion is not possible in case we are using the cashless. And then enhanced financial inclusion. the first point, access for the unbanked. Even in the remote area, village area, in those places or in those villages, no bank. Even for them, it is possible. So, digital payments platform can bring financial services to understand population, particularly in rural and remote areas. And then microfinance opportunities. If you are using the mobile net banking, seeing the history, how the business you have transacted, the bankers are sanctioning the micro loan. Say for example, 3 lakh or 5 lakh or 2 lakh or up to 10 lakh. No need to go to the bank. Just using your mobile, smartphone, you can avail the microfinance opportunities. So then reduction in the formal economy, greater transparency, digital transaction leave a traceable record. You can find out what we have done, how much we have sent, to whom we have sent. Everything is traceable. So we can avoid the illegal activities and black market operation if you are using cashless. And then improved governance. Transparency helps in reducing corruption and promoting fair practices. Now even in Tamil Nadu, the government of Tamil Nadu, they are introducing the online transaction in all to avoid the corruption. But still exists, we cannot go in depth. Economic growth and security. Boost to e-commerce and what are the opportunities for economic growth and security? Boost to e-commerce and digital business. So because of the economic growth, now we have a lot of e-commerce. I think recently we have introduced Jepto. I think you know. Earlier we have what are the e-commerce. Tell me the e-commerce name. Please tell me e-commerce name one by one. Amazon, then Flipkart, and then Swiggy. Now Swiggy they have introduced instant, immediate delivery. That is boost to e-commerce. Because of cashless society, it is a boost to now Jepto. One more Jepto, 10 minutes. Delivery within 10 minutes. Okay, just imagine if you are using the cash, you have to go to the business center. At least half an hour or 1 hour. You are wasting your time, everything. So, boost to e-commerce and digital business. Attraction of investment. So, this cashless economy society attract the foreign investment, especially in the Fintech and digital infrastructure. The foreign investor, they wanted to invest more amount in the Fintech technology, finance plus technology, and also digital infrastructure. So we can attract foreign investment if we are going for cashless society, and reduce risk of theft and counterfeiting. Counterfeiting means avoiding fake note. Fake note is possible when you are using the cash. It is not possible cashless society. Okay, no need to check, no need to count, no need to verify whether it's a original note or fake note. No. So reduce risk of theft and improved fraud detection. No worry about the fraud. No. Okay, suppose we have lost something, immediately we can trace out. And then what are the challenges? What are the challenges of economic impact? First, digital divide. Already I have told you, the rural people in village, they don't have the accessibility of internet, sometimes a smartphone, sometimes Wi-Fi. And also the elders and visually challenged divide, and then the resistance to change. Some of the people still they wanted to use only cash. They are not interested in using the cashless society and dependence on technology. This is a challenge. For the cashless society, we need smartphone, Wi-Fi, and then the application, GPay or whatever it is, Google Pay, GPay, Phone Pay, WhatsApp. So dependence on technology. We'll see one by one. So access inequality. Many people, especially rural or underdeveloped areas, less access to the internet, smartphone. And then exclusion of vulnerable groups, elderly population, low income group. They are unable to use this cashless society. And we have to take the effective steps. How to, already I have told you, challenge means we have to overcome. We should not say it is a problem, it's a problem. Find out the solution. How to solve the issues. So we have to ensure all the people are availing internet facilities, all the people are having smartphone, all the people are using the, internet sources. So digital divide. Next, resistance to change, cultural behavioral barriers. Some of the society, they are hesitating to use the, mobile with internet. Okay, they are thinking, no sir. So societies that prefer cash transaction resist adopting digital payment system due to mistrust or misfamiliarity. Sometimes they don't know how to use, or they don't have the trust. They are not allowing to use the mobile. Right. Next, merchant. Some of the merchant reluctance. They are having hesitation due to some reason. Small business and informal sector participants hesitate to adopt cashless system due to transaction fee, complex operation of digital economy. So due to this reason, this is also challenge. Next, dependence on technology. Already I have told you to use the cashless society, we are fully depending on the technology. You need smartphone first. Second, Wi-Fi. And you are depending on the service provider, GPay, then PhonePe, or any other provider, and UPI. So dependence on technology, systems failure. This is also, I think you might have faced this problem. When you are making the payment, your amount have been credited in your account. Debited in your account. But the amount is not reached the seller. Sir, we have not received. But when you are seeing the amount in your account, it is debited, reduced. System failures. They will say, no sir, you send it again. We have to wait for some time to get back the money. So this is because of the failure, system failure. And then technical learning. And adopting digital system requires individual business people to invest time and effort in learning the new technology. Unless otherwise, they are opening their mind to learn, to spend the time, and also to learn the new technology. This is not possible. This is a challenge. Investment security infrastructure. We need to invest a huge amount for the infrastructure, security infrastructure. Otherwise, this is not possible. And then dependence on external provider. External provider means software. To receive the money, we are using the PhonePe, GPay, WhatsApp. So these are another challenges with us. And then financial inclusion. What are the opportunities? Expanded access to financial services. Because of please remember, for Fintech, no need to open the account. Without opening the account, you can have the transaction, business transaction, finance transaction. And cost reduction is possible, greater financial empowerment, encouragement of savings. You can give your mobile, automatic deduction, transfer the amount every month to some amount. And you can open the savings, systematic investment planning. So this is possible if you are having the smartphone, mobile phone, net banking. So we'll see one by one. Expanded access to financial services, remote accessibility. So Fintech solution allow people without traditional bank account to perform financial transaction. Please remember, without bank account, you can transact all the financial transaction. This is because of financial technology. This is a great opportunity for us. Next, earlier to open the account, definitely you must visit the bank and with all valid documents. Okay, otherwise they won't open the account. Now, just by using your smartphone, you can open the account. You have to upload some of the necessary document they wanted. no need to visit the bank. So this is possible in case of, the cashless society. And then cost reduction. So no need to travel to buy or sell, to visit the bank or ATM. So we can reduce the not only travel, money also, and lower transaction cost. So to make the transaction through the digital mode, very minimum amount only. Greater financial empowerment, customized financial products. Please remember. So I have received frequently from the bank through message, sir, for you we are offering the loan this much. Seeing my financial history, how I have transacted using the net banking. So to fulfill your financial requirement, we are offering this much of loan. This is possible if you are using the net banking. Even the banker, they are approaching through message, sir, we are offering the loan. So this is customized financial product based on your financial history, what are the transactions you have carried out through your net banking. And then credit access. Again, credit access is possible by verifying your previous history. Digital transaction history can help unbanked individuals build credit profiles, which can then enable access to loan and financial product. And then encouragement of savings. So you can give the instruction to the net banking, automatic credit to a savings account. So it is possible. And also convenience of small saving. Cashless system allow very small contribution savings investment product, which is not possible with the traditional banking. So already I have told you, systematic investment planning. Anything. By using your mobile, you can repay the loan, you can go for the savings, you can make the investment. No need to visit the bank. So these two is possible, feasible. Just have the bank account, use the net banking, and then smart mobile, use the net banking. So savings possible. Don't think that, sir, I am the student, I don't have the money, 10 rupees, 15 rupees, 100 rupees to buy a share, mutual fund, 100 rupees regularly, every month 100 rupees, every month 200 rupees. So this, the cashless society encourage who is having the net banking for the savings. And what are the challenges of financial inclusion? Say exclusion of vulnerable groups. Already I have told you, even the students are vulnerable groups. Low income groups, vulnerable groups. So who is not having the access to the banks, their product, their service, called as vulnerable groups, affected person financially. And then financial literacy gaps. So most of us, we don't know how to save, how to invest. How to save and how to invest, make the investment. So financial literacy gap. Cost of digital payments. Actually, I'm not accepting these as challenges. Now, cost of digital payment is very less. When compared with if you are visiting the bank, if you are going to the business people, their cost, their travel and time expenditure is more. And then regulatory challenges. Actually, this is there. Then and there, the government of India changed the rules and regulation. Now we are unable to recall what is the present rule. Since then and there, they are changing the rule. So regulatory challenges. We'll see one by one. Exclusion of vulnerable groups. People with disabilities, vision problem, even hearing problem, they are also vulnerable groups. They are unable to use the cashless society. Even cash also they are problem, but even for them, this is also problem. Many digital platforms are not designed to be fully accessible for individuals with visual, auditory or other disabilities. Low income individuals. This is not possible for those without stable income. Savings may lack the resources to buy mobile phone or maintain digital payment accounts. And then financial literacy gap. This is also challenge. Lack of awareness. Many individuals do not understand how digital payment system work.
or the benefit they offer, leading to low adoption of rate. We don't know how to operate, and we don't know what are the advantage of using the mobile, that app, GPay or whatever it is. So that is a challenge, lack of awareness, unfamiliarity with the financial product. I can ask the question, but I don't want. Even we don't know how many of us, what are the banks, what are the products and services being offered by the bank to the customers. Many of us, we don't know. Please visit the bank. You must know, otherwise download the app. In the app itself, they are giving what are the products being offered by the banker, what are the services that are being offered. Try to use maximum. You are financially included. You are financially included. You are not approaching, you are not depending on private players, private service provider. That means you are availing the product and services. You have the awareness. You know what are the products, what are the services being offered by the bank, and you are availing. You are coming up in your life without approaching the private players. So that is unfamiliarity with the financial product. That is another major challenges. Not ready to learn what is given in the mobile. No, just to open the WhatsApp, what they have sent, friends, hi, we, that's all. Please learn the good things. What is required for your life. And then cost of digital payments. Transaction fees, actually it is given, but I am not agreeing. Very least transaction cost only. It's an opportunity, not challenges. And then device, of course I am accepting. We have to spend some maintenance cost. Smartphone, tablets and other devices required for digital payments are expensive for low income individuals. So maintenance costs, if in case if it is damaged, we have to buy a new one. So that may be the challenge, but we can overcome. By saying, no, it is damaged, so I cannot go for cashless society, no. And then regulatory challenges, inconsistent regulation. Lack of uniform regulation on digital payments can lead to confusion. So lack of uniform regulation on digital payments. For one player, one rule, another player, another rule, keep on changing, no consistency in rules and regulation, that leads to confusion. That is a challenge for the user. And then inadequate consumer protection. So weak legal framework, that is weak legal framework, fails to protect users from fraud or data breaches. But now this government of India has overlooked or overtaken this one. Now we have lot of protection. Instantly, see, please remember, your system, your device identify whether the individual is using the device or any other person, third party. The system identify and stop the transaction immediately because of Fintech. So if I'm using my Gmail, the other system, the Gmail asks, I wanted to identify two-way system. Okay, they will ask more. They will send OTP by mobile, whether you are the right person or not. So now the system identify whether you are the real user or not, with the help of Fintech technology, financial technology. So inadequate consumer protection, I think now we have overtaken. These challenges become an opportunity. And then security and privacy opportunities. Actually, we have the strength. We have plenty of security. We can prevent the fraud. We can prevent and we can stop the fraud. Even it is happened, we can get back what we have lost. So the first one is advanced security features, fraud prevention through artificial intelligence, improved response to fraud, and digital literacy and awareness. So these are the opportunities. Biometric authentication. So digital payments, you cannot pay just like. Digital payments platform often use secure methods. For example, fingerprint, facial recognition to enhance user security. And then tokenization and the encryption. Encryption means what? The information will not be leaked. The information will not be shared. The information is one-to-one only. Okay, whatever the information I have whatever the transaction I have made with the X, that is between me and the X only. And then two-factor authentication. This is again a security feature. Two-factor requires users to provide a username and password plus a second factor such as a code sent to a phone or a biometric factor to reduce the likelihood of unauthorized access to accounts. First you have to say the username and password and OTP, one-time password. Fraud prevention through artificial intelligence. Now please tell me whether artificial intelligence is best or human intelligence is best. Tell me either artificial AI or HI. AI is best or HI is best? Yes. So artificial intelligence is created by or invented. Artificial is we are giving the Python programming language or C++. Based on what the program, the system take the decision. Based on the program that we have given to the system decides. Only they see the programming language. But if suppose the same is verified by the human being, we'll see over and above the other regulation, the behavior, everything. So always human intelligence is the best than artificial intelligence. Right. So real-time fraud detection. So instead, already I have told you, the Fintech prevent the real-time fraud. Whether the transaction being carried out by the real user or not. So this is possible, Fintech. And then behavioral biometric. So payment system can use, see, with the help of typing speed, the system identify your typing speed, your regular typing speed. Suppose one day your typing speed is more high. The system find out you are not the right user. Stop the transaction. This is possible because of the financial technology. So please, payment system can use artificial intelligence to analyze behavioral patterns such as typing speed or transaction habits to detect discrepancies. And then improved response to fraud. So immediately you can freeze your accounts. To stop to prevent the fraud further, you can freeze your accounts. And then immediately you can resolve your dispute. Immediately you can solve your dispute with the banker or government of India, whatever it is. And then security privacy opportunities, digital literacy and awareness, empowered user. Cashless society leads to a more informed population as it provides opportunity to educate people about safety measures in digital payments. Now the government of India has taken the effective steps to create the awareness about the safety, security, transparency, prevention of the fraud, everything. So we are the informed society. We know awareness. We are having some awareness. So empowered user. And then good security habits. Awareness about fraud, mandatory changes in password and use of OTP can significantly improve overall cyber security. And then what are the challenges for security and privacy? First one is cyber security threats, virus. So there are two types of virus. One is virus in the system, and the people, the user, the fraudulent person, they will send the virus through mail, through link. Anyway, their intention is to steal your money, to steal your information. This is possible. These are real challenges for the cashless society. So cyber security, loss of privacy through virus, and then fraud application and fraud forms. So cyber security threats, malware, just sending the virus through link, through email, just without noting, sir, your account is credited 20,000 through mail. Just if you have clicked the link, your amount has been stolen, your information has been taken. So please avoid either maybe mobile, SMS or WhatsApp or mail, any link share, just delete that information. Don't see, or if it is possible, block that information. Don't click that information. Click that link. That leads to a huge amount of problem. Of course, we can recover, but still take time. So, malware and phishing attacks, virus attacks in the system. Again, the intention is to steal your amount, to steal your information. That is the cyber security threats. Anyway, the government of India has overtaken these two also. Fraud applications and platforms. Fake payment application. So, fraudster can create counterfeit apps. Counterfeit apps means similar to the same application. Say for example, your college website, similar to college website, and parallelly they are getting the admission, collecting the money from you, but original one is only your application. So you have to find out which one is the right app. That is also possible in cashless society. So fake payment application. And then unsecured third-party integration, payment system relying on the third party. I have approached one seller, they have told, sir, you are paying through GPay or PhonePe or WhatsApp. We are getting money, one day after or 2 days after, we don't know whether we have received or not. Sometimes they are taking some fee. So, totally they are depending on the third party. These another drawbacks or challenges of the, cashless society. And loss of privacy, mass surveillance transaction data can be measured by, sometimes the government of India is also, take the information of us. We are saying it is 1-to-1, but government of India can take the information, maybe any information for the development of the economy, but still the individual can lose the information. So, and card cloning. Say for example, I think already SBI, State Bank of India, this happened. Using your ATM card, you are taking the money, and below that, the fraudulent person, they wanted your OTP. So they have one SIM. Once you come back from the bank after withdrawing money, they will use your account to steal your money, to take your money. This is card cloning. Card cloning is the process of replicating the digital information stored in debit or credit card to create copies or clone cards, also known as card skimming. So I think now they have detected, now they have stopped. Not possible now. And in fact, on small business, the opportunities. What are the opportunities for cashless society for the small business people? Expanded market reach. Now, the business people can sell or buy anywhere in the world because of the e-commerce. You are buying from Amazon, USA. Okay, you can buy from any country through e-commerce. So the business people can expand the market. If you are using the cashless society, expand the market. Payment also, third party platform, apps, GPay, Google Pay, WhatsApp, whatever it is. So we can expand the market without any restricted destination. This is possible because of the cashless society. So, and then improved financial management. You know, what is the inflow, what is the outflow? Plan for the future. Instantly you can find out, since everything is recorded, you have the account. So future planning is possible because of the cashless society. How much the inflow, how much the outflow, and then what is the budget for the future period. Then access to digital lending and credit. We will see the point. Expanded market reach. Access to a wider customer base. Digital payments enable small business to attract customers beyond their immediate locality. Some of the market may be local market, state market, country, all over the country, international. Because of the e-commerce, now everything is international market. Everywhere we can buy anywhere, anything. And then integration with the online platforms. E-commerce platforms and digital wallet helps the business tap into national and global market. Social media commerce. So now social media also plays a vital role for the business people. So through social media they are expanding, they are developing their business. And then improved financial management. Already I have told you, automation of transaction, digital payment simplified, bookkeeping and reduce accounting errors. Just by clicking one button, they know how much they have received, what is the payment, what is the net cash available, what is their future plan. This is possible because of the cashless society. And then real-time financial insight. Right now, how much they have received, how much they have paid, possible. Business models can track revenue, expenditure and profits instantly, immediately, since everything is recorded. Better access to tax benefits. Digital transaction makes tax compliance easier. They know how much they have to pay the tax. One already we have discussed, prevents evasion of tax. And also this is the useful for the business people, how much they have to pay the tax. And also reduce it makes the work easier. And predictive analytics for growth. Business can analyze sales trend and make data-driven decision. They know the sales, how much the sales, what will be the sales of the next week, next month. So they can predict, they can make the trend because of the e-commerce or cashless society. With the cash, we cannot predict, we cannot expect what would be the sales of today or tomorrow, but this is possible approximately. And the opportunities, access to digital lending and credit, alternative lending solutions. Small business can access loans based on digital transaction history. Even the small business, they can access. The bankers are providing the loan or extending the loan. Microfinance up to 10 lakh based on their business history. No need for collateral for availing through mobile. The bankers are not asking any form of security. So there is no need for collateral security. Faster loan approval process. Just submit the application through your mobile. Maybe the next day the banker will sanction. This is possible for individual and also business people. Please don't think only for business people. This is for individual as well as for business people. And then impact of small business challenges. What are the challenges? Technical challenges and connectivity issues, trust and adoption barriers, dependency on third-party service provider. See the technical challenges and connectivity issues, internet accessibility barriers, poor connectivity in rural areas affects the digital payment. So Wi-Fi is not working properly in the rural villages. That will affect the digital payments, digital transaction. Lack of technical know-how. Already I have told you, we cannot expect all the people they know how to operate, how to use. No. Many small business owners struggle to use and maintain the digital system. And then frequent software update. We have to update the software frequently, failing which the transaction won't be successful one. So we need to update even your mobile. They will ask, update the system, software. So these also challenges. A risk of system failure. So power cut, server error can stop the transaction. By the time we may lose the money temporarily. And then again challenges, trust and adoption barriers, customer hesitation. Many customers will trust cash transaction more than digital ones. Some of the customers they wanted to carry out only cash, not digital mode. That is a challenges. Lack of awareness. Some business are unaware about the benefits of digital payments. So they wanted only cash payment. That is a challenges. Data security concern. Fear of data leak discourages digital adoption. So they may fear the information will be leaked. So that we have to pay more tax. We are accountable, answerable. Let's stop the online platform. Next, dependency on third-party service provider. So costly already third party means you are depending on the app, GPay, Google Pay and so on. So costly provider policies. Transaction fees are generally high in case of third party outsourcing, which directly impacts profit of small business. Limited negotiation power. So in online platform we cannot negotiate. But please remember, always less than the where you are going to buy from the shop. So no need to negotiate, but negotiation not possible. I'm sure when you are buying from e-commerce, electronic commerce, Amazon or whatever the Zepto, whatever the e-commerce, definitely the price is less than from the physical stores. So, but you cannot go for any negotiation. Sir, will you give for 100 rupees less or not possible? This may be the challenge. And the last point, technology and infrastructure opportunities. Innovation in payment technology. So this is an opportunity. So faster, efficient transaction, enhanced transparency and accountability. See the first point. Advancement in secure transaction. Use of blockchain, OTP and biometric authentication make transaction more secure. This is an opportunity. So no need to fear about fraud or loss of data, information. End to end, already I have told you, one to one only. But still, if the government wanted to use the data, your information possible. Then faster and efficient transaction, instant payment processing. So digital payments reduce waiting time compared to traditional banking system. So digital payment immediately you can transact. Suppose traditional banking model or method, you have to wait for some time until they are completing their process. And real-time cross-border transfer. Faster international transaction eliminate the delays of traditional banking system. So this is possible even to send the money, to receive the money, to transact worldwide. Cashless society is possible. And then enhanced transparency and accountability. Easier tax compliance. So already we have the record. What is the receipt, what is the payment, what is the surplus, you pay the tax. If it is cash society, they have to maintain the proper note, proper account, they have to get the advice from the auditor, they have to sign, legal formalities are there. But if it is cashless society, even the government of India is accepting. So it is easy for the tax compliance. Better financial planning. Already I know. You know the real-time source. I mean, what is the source? What is the expenditure? What is the source? What is the application? Plan for your future, preparing the budget. So business can monitor real-time cash flow and plan their budget for improved financial stability. Encouragement of formal economy, reducing dependency on cash promotes financial accountability, strengthen the economic growth of the country. And then this is the last point, challenges. What are the challenges? Infrastructure gap. In India, we don't have the proper infrastructure to handle the cashless society, especially rural or villages. These are challenges. And lack of technically skilled workers. So still we are not learned everything, how to operate, how to transact. That is another challenges in India. And we need to invest a lot of huge amount in the infrastructure for the cashless society. We will see one by one. Insufficient payment infrastructure. Many regions, especially rural areas, lack the necessary infrastructure. That is, internet connectivity is less, mobile network is less to support digital payment system. There is a challenges. And then limited point of sale. So limited point of sale also less in the rural areas. So please remember how the Zepto is delivering 10 minutes. Anyone can answer to my question? How Zepto is delivering within 10 minutes or 5 minutes or 15 minutes? How it is possible? Just establishing. Madam?
They have the local network in the right sense, clearable network as a suppliers.
That is not okay, madam, but still They are establishing their own, godown, their own warehouse nearby everywhere. So this is possible. They are not going to buy from the supplier. No, they are having their own, yes, warehouse, storage, everything. So every surrounding. So they have, and they are delivering in 10 minutes. So this is another point of sale is not, so Zepto is okay, but what about other e-commerce? So less. So that is the delay. Okay. Thank you, madam. Thank you. Lack of skilled workforce, limited technology talent, a shortage of skilled professionals which are capable of maintaining digital payment system can delay the implementation of efficient infrastructure. So lack of technical talent person. So still we have to inculcate, we have to learn how to operate, how to transact, how to use, how to how to download and upload. So these are things we have to learn. And the training gaps in existing workers. Already I have told you, we have to update, we have to keep on updating the system, software, otherwise we cannot use. So employees are at all levels required training to manage new technologies, especially in retail sector where traditional payment system were previously dominant. The next challenge is expensive technology setup. So we have to spend a huge amount to install, to erect transaction for the cashless. The cost of implementing and upgrading digital payment system, including software, hardware, security protocols, is expensive for small businesses, and financial barriers for small businesses. Small businesses struggle with the additional cost like purchasing payment licenses, investment in encryption tools, and training employees. So these are the challenges for small business people. And conclusion, we have to focus 2 points for the cashless society. Please remember, we need 2 points. I'm telling you the 2 points. As we move from using cash to digital payment, we should take advantage of its benefits while solving key challenges. What are the key challenges? The future is digital, but its success depends on 2 important factors. One is inclusivity, another one is adaptability. So we have to focus the 2 factors. One, inclusivity. Second one, adaptability. Sir, what is inclusivity? What is adaptability? Please see. Inclusivity will ensure that everyone, regardless of age, region, everything, income, they must be included. Sir, is the urban area, city, rural, is a aged person, his vision is less, is unable to hear. No, every people in the world must be included. They must have the capacity, must be included. Inclusivity will ensure that everyone, regardless of age, income or location, can access a cashless economy. The first point, inclusivity. Second point, adaptability. Adaptability ensures the effective adoption of digital changes. So one is inclusivity, another one is adaptability, which leads to success of cashless society. By focusing on both inclusivity and adaptability, we can ensure a smooth and successful transition into a cashless society. Please use your smartphone, open the account, bank account, and use your smartphone for all your financial transaction. Not only financial transaction, by seeing your history, the banks will sanction the loan, microfinance loan, maybe up to 10 lakh. And you can save the time, you can save the energy, you can save the money also. So avoid cash transaction, carrying the cash. Be a cashless society to support the government, for the individual, for the world. Thank you for your cooperation. Thank you.
Thank you, sir. Thank you for your insight, and thank you for your great effort and time, sir. Thank you.
small, madam, 1 minute. Just 1 minute, small video.
I welcome you all to the online presentation of our international conference on Fintech Revolution. Due to time constraints, online and offline meetings are happening upstairs. Please stick to the time limits of 5 minutes.
Sure, can. So please presentation will be very class start. Time to the presenter.
One more.
Cash has been the dominant payment system for hundreds of years. But cash has its flaws. If it's lost, stolen, or destroyed, there's no way to get it back, and it's easy to hide. So it can be used for all sorts of criminal activities. So, for almost as long as there's been cash, there's been a dream of a cashless society. Recently, we've seen an explosion of innovation in payment, and it seems that the dream of a cashless society may finally be within reach. But these new systems all have barriers to use. They may require a smartphone, a bank account, a good credit score, and they aren't free. Cash has been around for so long for good reason. It doesn't require any complicated technology. It protects your privacy. There's no data trail, and it's free to use. It's a public infrastructure for everyday payment. So, for designers of new payment systems will be to invent solutions that serve the public interest, that do the things cash does well as the things cash doesn't.
Timely and adequate manner to provide financial services for individuals and businesses. This is the financial inclusion. This will include the entire public of India in general.
So finally, I thank Dr. Not Dr. Vinodri Madam for given an opportunity, and finally thanking my own scholar, Mr. Amit and Ms. Daya, for supporting me, preparing, and presenting this video. Thank you so much. Thank you.
A big thank you for that wonderful presentation, sir. Your insights were enlightening, and we are grateful for the knowledge you've shared with us. Hereby, I request our HOD ma'am to honor the chief guest.
We will now start with paper presentation from our valuable participants. Before we begin the offline participation, I want to inform that the online participants please join the link. It will happen simultaneously. So for today's online participant, we have Ms. Vidya. She's done MCOM, MPhil, SCT, PDDHE. She's from the Department of BCom Bank Management. She has participated in multiple conferences. She has 10 years of experience in teaching, has published various publications, and has contributed greatly in the research field. We are pleased to have her as a chief guest today. So first I would like to call up J.E. Alisha Banu up on the stage to begin with her presentation.
S. Vidya from Bank Management. She is going to judge the offline participants, and online participant Dr. Chelsea is taking care. It's going to have simultaneously. If anybody is going to present online, please join the link. And for offline, ma'am will be judging. And for online, Chelsea ma'am, Dr. Chelsea is going to judge. It is going to happen simultaneously due to time constraint. Okay, thank you for understanding.
We now felicitate Ms. S. Vidya ma'am with a certificate from our HOD. Please give a big round of applause. Dear presenters, please be ready. It's going to start. A humble request, stick to your time slots of 5 minutes duration. Right? All will be taken for judgment. Thank you. Attention please, we have JE Alisha Banu doing a presentation on cyber security challenges and solution in digital banking. Next up, G. Mohan Raj and S. Vidya Lakshmi, be ready.
A very good afternoon to one and all present here. I, Alisha Banu, the scholar from the Department of Commerce, Annamalai University. Today I will be presenting my research on cyber security challenges and solutions in digital banking. A case study of Chennai City. As digital banking grows, so do cyber security threats like phishing, ransomware, and unauthorized access. These threats undermine customer trust. My study evaluates the cyber security measures implemented by banks in Chennai. Customer awareness and their efforts on user confidence based on responses from 50 digital banker users. Objectives. The key objectives of the study is to identify cyber security threat. So malware and ransomware are the primary threats acknowledged by 66% of respondents. Evaluating security measures, 64% view existing measures positively, but 32% are neutrally suggesting communication gaps. Assessing customer awareness, while 64% are aware of threats, 34% remain uncertain, indicating a need for more awareness campaigns. Customer behavior, 66% of digital banking due to security through 56% are uncertain. Trust and confidence. 62% of respondents trust digital banking security, but 34% are neutral, highlighting the need for clear communication. Problem statement. The expansion of digital banking brings convenience but also exposes user to cyber security risks. Despite improved security, protocols gaps remain, particularly in customer awareness. This study examines cyber security practices, user awareness, and purposes solutions for enhancing digital banking security. Methodology. I used an empirical and descriptive research design, collecting primary data from 50 respondents through structured questionnaires. Secondary data came from the journals and websites. The data was analyzed using the percentage analysis. Findings and suggestions. AI-driven threat detection. Banks should incorporate AI for better threat detection. Customer education. Banks must run awareness program advising the customers to use strong passwords and protect sensitive information. Regulation. Policymakers should enforce cybersecurity regulations. Targeted ransomware education, where focus is only on raising the awareness about ransomware. Multi-layered strategies, where a combined approach using the technological audits and customer education will strengthen the security. The last conclusion. As the digital banking grows, cyber security becomes a crucial. Customer education, advanced technologies like AI, and clear communication are key to improving the security. Collaboration among the banks, policymakers, and customers is essential to build a secure digital banking environment. Thank you for your attention. I am now open to any questions or clarification regarding the research.
Thank you, J.E. Alisha Banu. Next up, we have G. Mohan Raj and S. Vidyalakshmi. Daya M. and Dr. Sundaram, please be ready. Good afternoon to one and all present here. I am very glad to be the part of this conference and thanks for giving me this wonderful opportunity. Myself is Vidyalakshmi, Department of Business Administration and in Meghna College of Arts and Science. And today I am going to present a topic on about digital transformation in finance. Digital finance is the route towards attaining financial inclusion and economic development. And digital finance is a lifetime for economic enhancement, enabling business and individuals to invest, save, and pay through digital platforms. The objective of this research is to have an influence on aspects of digital transformation, such as why firms engage in digital transformation, how do they restructure to implement digital transformation and how do they build digital value proportion as a part of digital transformation. This research on digital transformation comprises of two interconnected and independent studies. And the objective of the first study is about the adoption of new technology, and the second study is about the focus on gaining an insight and understanding on individual behavior and perception towards digital finance during COVID-19. Digital service is explained as a service available through digital channels, and those services include savings, payment, insurance and credit. Further, the digital channels comprises of internet, mobile phone, POS terminals, ATMs, tablets, electronically enabled cards, and etc. so that the environment makes seamless transaction. This concept of digital finance has been explained in the report of McKinney's 2016 as financial service derived through digital platform over internet and phones. The user of the online payment includes all the individual from low level to high level income, all types of businesses and all government entities. The providers of financial service over digital platforms include financial institutions, bank, payment platform, fintech providers, telecom companies and other businesses. The types of digital transformation has divided into three types: internet banking, plastic money and mobile banking. The first one, internet banking, where the customer of bank and other financial institution undertake a variety of financial activities via internet banking, as it's referred as e-banking, online banking, etc. Where the fund transferred through the internet banking, where they provide a money fund across the different accounts and banks all over the India and abroad. The fund transfer is divided into two parts: NEFT, National Electronic Fund Transfer, where the businessman and the individual can transfer the money through inter and intra banks. It can be done through saving account or on online mode. And the next one is RTGS, real-time gross settlement. The transfer of money is done on real-time basis, where it can be done without any delay of transaction. And the next one is investment. Investment is done through an internet banking, where the rise of money and offering consultancy services regarding investment decisions through the services like trading in shares, mutual funds, fixed deposit, recurring deposit, silver, gold and bonds, etc. And the next one is plastic money. A debit card is explained as plastic money, where it carried an individual to make a purchase just from a convenience of a card. In other hand, a credit card is issued by a financial company where a purchase on credit and make a payment on later. Both the mode of financial services provide a convenience of payment and the card carried through in cash in hand. And the next one is mobile banking. It is an advanced version of internet banking where it allows the user of customers with their convenience with the financial service at any place. Status of digital finance in India. India is exponentially growing in terms of digital finance service as its accessibility for its people. According to the report of World Bank Group 2020, the digital transaction has increased not just among P2P, public to pay, but also between G2P, government to pay. The volume of transactions to UPI has been 10 times growth, ranging from 1.7 million to 1.3 million over 2017 to 20 as per month. The Global Fintech Adoption Index report, as in 2019, has surveyed the awareness of fintech service. It is an adoption among individuals as well as SME owners. The percentage of adoption has been increased, ranging from 16% in 2015 as it's rapidly increased into a 64% in 2019 over the world population of 96%. And the growth and developments are They're empowering new players with the new approaches in the market by offering an e-money products supported by EMDES. And next one is increasing in health competition among players by promoting and keeping in mind the flip side of digital transfer, like upskilling and the economy of scope. And next one is protection of consumer against frauds, being addressed through emerging and regulating policies. Further laws are being laid over the world against security, privacy, risk and data protection. And next one is promotion digital finance among customers and fostering their confidence to use a digital finance service by the focusing their benefits and granted by the government. And post-COVID-19 expansion of digital finance in India. The COVID-19 pandemic has increased the usage of 42% of people over the digital finance. As an alternative of cash on delivery, the e-commerce website like Flipkart, Amazon are used as digital platform of money transformations. So that the government has taken a step of awareness by creating a NPCI, India Pay Safe, so that the money has made through an online. As the post-COVID-19 relief package was released by compared to an off-of amount other middle income, so that the G2P payment through digital finance platform has approximately 4,000 million transactions.
Vijayalakshmi, can you go on to the conclusion?
The present study was to the gain of understanding on individual behavior and perception towards digital finance. For this purpose, the study has discussed concatenate factors in the theory of planned behavior and behavioral bias to compare the behavior of individual in adapting digital finance. So that the effect of COVID-19 has led the positive change in the adaptation process of digital finance. However, the study of behavioral aspect alone is not sufficient. To get a bigger picture, the study has also bifurcated the types into earlier and late adopters of digital finance. Further, quantitative analysis were used to draw and reach the conclusion of the study. Thank you all for giving me this opportunity.
Thank you, Vijayalakshmi. I now request Ms. Taya to present her paper. Good afternoon to one and all present here. First of all, I would like to share and express my gratitude towards the organization committee to giving us the opportunity to present a paper on the topic Fintech Revolution. Next, I would like to express my gratitude to our guide, Dr. N. Sundaram sir, for supporting us to do the paper and for the presentation of the paper. Moving on to the topic, that is Fintech for financial inclusion in BRICS countries. Introduction. Financial inclusion is a key driver of economic development and poverty reduction and social equality, particularly in case of emerging economies. Emerging economies means developing countries. They are in the stage to reach the developed country status. Okay, it enables the individuals and businesses to access economic stability and the growth. And among the fintech innovation, you'll be knowing different kind of participation. Among that, the mobile technology has played a crucial role in bridging the financial divide and offering scalable and cost-effective solution for enhancing the financial participation. The reason is we are using, from the common people to the top type person in the society, we all are using the mobile technology, and the contribution Fintech technology is more when we are comparing it to other kind of financial technology. So, according to Osili Piquet 2018, he has defined that mobile cellular subscription, broadband penetration, and the usage of internet are considered as the key indicators for fintech adoption. In our study also, we have adopted the same indicators to find out whether they are and BRICS nations. It consists of Brazil, Russia, India, China, and South Africa. But recently, more countries like Ethiopia, Indonesia, and UAE has been added. These are the literature review. And moving on to the research gap and objective. After reviewing the literature, we could able to identify that previous studies show the mobile banking and fintech application have improved the accessibility, but there is still evidence on whether this translates to higher level of formal banking and participation, like increased depositors in the commercial bank. Next is, most of the studies are focusing on the correlation between fintech and financial inclusion, and the role of technological resources is missing. And the last gap is, authors have identified the short-term effect of fintech with financial inclusion, and there is a lack of long-term effect. And also with cross-country perspective, we'll be mostly studying about what's the situation of India. But we need to be like a step forward. We should compare that the condition with the emerging economies. That's why we have chosen the population as BRICS country. Moving on to the finalized objective from the research gap. First one is to analyze the effect of mobile technology on financial inclusion in BRICS country. And second is to study the role of technological resources in attaining financial inclusion. So these are the data and methodology, independent and dependent variable, the indicators and the sources. All the indicators have been taken from World Development Indicators for the year 2010 to 2021. And the methods used for analysis is generalized linear model and quantile regression. Generalized linear model using R software and quantile regression using the Gradle software. Why GLM? Because it's an extension of the traditional linear regression model, and the specialty is they are useful when the response variable does not follow a normal distribution. And the usage of QR, otherwise quantile regression, is it is a regression technique that models relationship between predictors and response variable. And why to include these two models in one study? The reason is we can provide several benefits, like GLM can provide a robust estimation of mean relationship, not the median relationship, okay? And while QR can provide a more nuanced understanding of relationship in the different quantiles. Moving on to the model specification and hypothesis. These are the model specification and these are the framed hypothesis. Result and discussion. This is like quantile regression, and the result you can see. From this result, we are going into the discussion part, that is interpretation. Here you can see mobile cellular subscription is having a positive impact 8.69. That is coefficient, you can see 8.69. That is a positive impact, which means this indicates that increase in mobile cellular subscription is associated with the high number of depositors and showcasing the role of mobile technology in expanding the financial inclusion. Okay. Next, moving on to the broadband penetration, it is showing a negative impact. You can see minus 44.97. So that's a negative impact, and we can interpret that while broadband penetration is generally expected to enhance the inclusion, this result might suggest changes like it can be like high cost, maintenance, and infrastructure gap, literacy issues. So these are the things which hinder the adoption of underserved population. Moving on to the next, that is internet users. Here also insignificant impact, not negative but not as significant. The interpretation is it could imply that while internet access is essential for financial technology and also for mobile technology, but it does not alone drive the financial inclusion unless the payer target fintech solution are affordable or banking services. Okay, overall observation is mobile technologies stand out as a key enabler of inclusion, likely due to its widespread availability and cost effectiveness when comparing to broadband services. The insignificant role of internet users suggests that inclusion effort must address barriers beyond the basic access, such as we need to improve the digital literacy, affordability, and also trust in the digital platforms. Next is quantile regression result. These are the results from quantile regression. And next one is the GLM result, generalized linear model. In this result also you can see for mobile cellular subscription, it is a significant positive effect, that is 32.44. You can see the estimate. So this also giving the same result, which means the technology is plays fostering financial inclusion as mobile phone serves as the accessible gateway to digital financial services. And the impact of internet users, you can see it is negative. Also for broadband penetration, it shows the negative result. And the model fit of this model is explained. The adjusted R square is 0.3276. It indicates that about 32% of the variation in the number of deposit is explained by independent variable. And the significant F statistics is P 0.001, which confirm that model is overall provides a meaningful insights. And this is the forecast graph, that is with the increase in the income, how it is affecting the number of depositors in the commercial bank. Here you can see the interpretation. With the increase in the income, you can see that blue line, it is showing the increase in the number of depositors, so it is increasing. Okay. Conclusion: in connection with the first objective, the mobile cellular technologies are showing positive impact on quantile method and also in GLM method. And the thing is, internet usage and broadband penetration, they are showing little bit insignificant and negative impact. The reason can be technological differences, infrastructure difference, then trust issues. That can be the reasons. And these are the policy implications which the government can implement for solving these kind of problems. References. Thank you for the opportunity.
Thank you, Ms. Daya. Next up we have Anand. After that, Dr. Jaya and Mr. Pradeep will be ready.
Greetings one and all, may I have your kind attention please. Very good afternoon. My name is Anand. I am working under the supervision of Dr. N. Sundaram as a research scholar at Department of Commerce, VIT University, Vellore. First of all, before going further with the presentation, I would like to thank Sir for first sharing the opportunity and for helping us in guiding and writing the research paper. So the title of the presentation is Empowering Consumers' Sustainable Choices, the Ripple Effect of Green Fintech Adoption. This is the brief outline of the presentation. Introduction. All experts here since morning have been talking about what is fintech, but recently another important concept has emerged, and it is called green fintech. So the word is an amalgamation of two things. First, financial technology, and second, environmental sustainability. So the objective of green fintech is that it addresses ecological challenges while ensuring financial inclusion. Next, these are some examples of green fintech in practice. In India, the prevalence of green fintech is very low. There's only one company called Newfin that offers an application where users can invest in companies that are committed to reducing global carbon emissions by providing transparent impact reports. Now, why green fintech is important? Green fintech is important because the market is expected to grow at an annual rate of 22.4%. Second, it advances the United Nations Sustainable Development Goals. And third, 53% of Americans prefer digital wallets. Next, now we'll focus on why the concept is important from perspective of academics. First, there has been yearly growth rate in the publications of green fintech, and the growth rate is approximately 35%. Next, there has been empowerment of consumers, which prevents greenwashing. Third, green fintech has become a part of our everyday lives. Now, research gaps. Broadly, green fintech solutions have been recognized for influencing consumers' behavior in three different ways. First is adaptation of environmentally friendly behaviors. Second is it affects their quality of life. And third, it affects green consumerism. Despite these insights, two key gaps remain. First is there remains a gap in understanding how the adoption of green fintech influences consumers' sustainable consumption behaviors. Second, another gap lies in exploring whether green fintech adoption enhances the perceived green value of the green fintech product or services consumed. So these are the research questions. First is, does green fintech adoption positively influence activism behavior? Next, does it influence buying less behavior? Next, does it influence sustainable purchase behavior? These are the three sustainable consumption practices. Research question 2 is, can green fintech act as an antecedent to green perceived value? Third, can green perceived value mediate the relationship between green fintech adoption and the three sustainable consumption behaviors? Due to paucity of time, I would like to skip a literature review. These are the research hypotheses though. These are developed based on the research questions. This is the methodology used. First, the research type is analytical. Quantitative data was used. Systematic sampling technique was used. The sample size was 186. According to PLSM rules, we follow guidelines of Hare et al. And according to him, the minimum required sample size for the study was 137. Data type is primary and cross-sectional. Data collection was done through scenario-based interview schedule. Analytical tool used was PLSM, structural equation modeling. Framework used was stimulus organism response framework, also known as SOR framework, where stimulus was the use of green fintech application, organism was perceived green value, and response was sustainable consumer behavior. These are the results of the pilot study. Pilot study was conducted to ensure consistency in the questionnaire. 4 key measures were adopted: comprehension of the questionnaire, appropriateness of the questionnaire, confusion in questions, and the order in questions. All of these were measured on 7-point scales. As we can see that all mean values are above 6, the questionnaire was considered adequate for the study. This is the conceptual step 7 model. Extreme left hand side we have the independent variable green fintech adoption. In the middle we have the perceived green value, which is the mediating variable, and at the extreme right we have the 3 sustainable consumer behaviors. This is the assessment of the inner model. All factor loadings exceeded the 0.7 threshold. Similarly, construct reliability was appropriate because values for Cronbach alpha and composite reliability was greater than 0.7, whereas for divergent validity, AVE was calculated and the value was greater than the 0.5 limit or threshold. Again, VIF values were calculated, all values were less than the 3 limit. Similarly, STMT ratios were calculated for discriminant validity, all values were below the 0.9 limit. This is the assessment of the outcome model. We can see that all hypotheses are supported, meaning green fintech adoption affects the 3 sustainable behaviors. It also affects perceived green value, whereas perceived green value in turn affects the mediation between the relationship between fintech and 3 sustainable behaviors. This is the quality criteria of the outer model. these are the R-square results. Activism behavior has the highest explanatory power, which is followed subsequently by sustainable purchase behavior and buying less behavior, where the power was moderate. Perceived green value explanatory power was low. This is expected because mediating variables usually have low explanatory power. This is the discussion. So, what the study actually contributes? It contributes to the call made by Pushman and Kamareski to advance the field of green fintech through a customer-centric lens. Second, unlike Z, our study established some other finding, and we found that green fintech adoption also has a similar effect on perceived value. Third, we extended the findings of Gao et al. 2024, who suggested that fintech enhances the green value of businesses, but in contrast, we demonstrate that green fintech also boosts consumer green value. Now coming back to the main point, the title was Empowering Consumers' Sustainable Choices, the Ripple Effect of Green Fintech Adoption. So, last point says, this study is one of the first studies that demonstrates how green fintech adoption, which is in itself a sustainable action, influences three key aspects of consumers' sustainable behavior, thereby explaining its ripple effect. These are the limitations and future research directions. First, the study was cross-sectional, so limited assessment could not be done for a longer period of time, which future studies can use a longitudinal approach. Second, the studies solely focus on SBI users and third party. Therefore, future studies can explore banks outside SBI and, of course, users from outside third party. Third, future studies can control for gender and age variables in the model. This is the measurement instrument. These are the references. Thank you. Thank you. Thank you. Of course. There were two main challenges. First, there was very limited awareness on green fintech. Karpadi is a semi-rural area, so customers were not aware of even fintech. So green fintech is not a possibility. Second challenge was, since the study employed scenario-based questionnaire, it was very difficult to ask consumer to sit together and explain, because we used interview schedules, so we had to use face-to-face data collection. In that model, we were unable to hold customers. For example, if 60 were coming at a particular period of time, we were not able to ask all 60 to sit and yes. So these were the two main challenges. Thank you so much. Thank you for taking concern.
Thank you, Mr. Angad Anand. Next up, we have Mr. Pradeep T. After this, I want S. Bharani Lakshmi, P. Abhinaya, and Dilshad B. to be ready.
An empirical study based on three pillars of human empowerment, fintech, and microfinance. Empowering women through fintech and microfinance. This presentation develops into the how fintech and microfinance significantly uplift women socio-economic status, fostering gender equality and financial independence. Enhancing women empowerment, ethical evidence focus. These are all empowering women through in fintech. Socio-economic development implications. Research and questions in fintech and women empowerment. Impact of fintech on women. Women empowerment. Social impact of financial inclusion. Role of microfinance in empowerment. Political empowerment through finance. Interaction between fintech and microfinance. Measurable outcomes in various contexts. Economic status and enhanced access to measurable. Empowering women through financial inclusion. Women empowerment and sustainable development. Women empowerment is essential for achieving sustainable in development across various sectors. Economic empowerment, access to financial resources and opportunities is virtual for women independent. Women independent is virtual. Social empowerment, building network and support system, booster collaboration and community. Political empowerment, increasing women's participation in decision making process enhance influence. Understanding the role of fintech. Definition of fintech. Fintech refers to financial technology and that employs software to deliver the financial service immediately, efficiently. E. Access to financial resources. Next, tailored solution for women fintech. Understanding microfinance and its impact. Definition of microfinance. Financial education, empowerment of women, encouraging savings, investment in health and education. Health and education are the resource methodology overview. Goals, approach, research, design. Data collection, insights and approaches. Source of data collection. We gather insights for surveys targeting women using fintech and services. Laboratory view in existing literature on women empowerment, initiative information or approaches. Surveys conducting among women users to understand the experience with the microfinance services are essentially structured questionnaires. Utilize structured questionnaires to collect the quantitative data efficiently. Stakeholders interviews with the financial sector. Stakeholders provide a critical context and perspective. Semi-structured interview. Semi-structured interviews are allowed for the depth of quality. Case study successfully impaired. Successful example. Fintech initiative in Kenya. Microfinance program in Bangladesh. Collaboration project. Significance of case studies. Next step for women empowerment. First one. Research on fintech impacts. Investigate the long-term effects on fintech microfinance. Conclusion of the fintech women empowerment. Empowering women through fintech innovation. Financial inclusion is about helping people, especially women, access opportunities that allows them to grow, create wealth and contribute to the economy. Fintech is the key of unlocking this for millions. Jack Dorsey, co-founder and CEO of Square. Thank you.
Thank you. I now invite the next presenters onto the stage. everyone, one and all present here. My name is Sabinaya and she is Dilshad. We are from BCom General. We are from SDMB Vaishnav College for Women. We are very delighted to present our paper as on the topic that plays a shield against consumer manipulation in ethical marketing. So here we go. Ethical marketing offers a crucial alternative prioritizing respect and honesty. So what is ethical marketing? Ethical marketing is a business philosophy focused on integrity. It means being truthful, transparent and fair in all marketing activities. Instead of using manipulative tactics, ethical marketing builds strong and long-lasting relationship with customers. But unfortunately, manipulative marketing practices like false advertisement and claims, these actions damage consumers' trust and create unfair marketplace and also spoil brands' reputation. This research aims to empirically examine the role of ethical marketing in preventing consumer manipulation, and we investigate consumer perception of ethical marketing and how these perceptions influence the trust in brand. So the next is objectives of the study. The first objective is the primary goal is to measure how familiar consumers are with the concept of ethical marketing. And the second objective is the research aims to understand how consumers view and interpret ethical marketing practices. And the third one is the study seeks to identify the ethical value that are important to consumers in marketing. The next one is research methodology. Research design is empirical research. Sampling technique is simple random sampling. Sample area is Chennai city, that is South Chennai. Sample size is 110. And the qualitative data is primary data, a structured questionnaire. Quantitative data is secondary data, books, journals, website, etc. Analytical tools, that is percentage analysis and fragment rank test. And the next is the limitation of the study. This study was conducted within a short period of time, which naturally limited the scope of data collection. Due to these time constraints, the sample is restricted in 110 respondents in Chennai. This sample provides valuable insights within this context. It may not fully represent the diverse perspective of the entire population of consumers in India, but future research could provide a comprehensive understanding. The focus of the research was specifically on the consumer goods companies or some retailer business. Therefore, these findings and conclusions drawn from the study can't be used in other sector organizations. And also, there are many chances of misrepresentation of response. While the questionnaire was designed to minimize biases and the biased view of respondent in another cause of limitation. In future, we expand this research in depth to gain validate survey response. So the next part will continue by Dilshad.
Now the demographic profile of respondents. A clear majority of the respondents are female, which is 61.8%, and the male are 38.2%. And the largest age also falls under 16 to 28 years old. The most respondents are undergraduate, which are 63.7%. And the significant majority of areas is urban, which is typically for a city like Chennai. And the monthly income falls between 15,000 to 30,000. And the respondents about how people are awareness of ethical marketing, a significant portion of respondents of 66.4% were aware of the term ethical marketing, while 46.4% were somewhat familiar with the concept. And the Friedman rank was conducted to understand which is ethical aspects consumer value the most. And most of the people was ranked transparency, which consists of the consumer trust, loyalty and purchasing decision, and the lowest for social responsibility. The suggestions of ethical marketing are: first, businesses and policymakers need to collaborate to raise awareness about what ethical marketing truly means, and then companies should use the power of these tools to communicate with consumer. And third, the government and the regulatory bodies should play a supportive role. And the conclusion of the topic is, in the conclusion of ethical marketing is more than a competitive advantage,
by prioritizing transparency, honesty, and consumer well-being. And our study reveals that it's a fundamental pillar of building trust and protecting consumer from manipulating practices. And it is a win for both businesses and consumers. Thank you all for your attention.
Thank you. And I request the next team onto the stage.
Good afternoon to one and all present over here. I'm B. Pavitra and she's Kipna S from SDNB Vaishnav College, here to present on the topic Understanding Consumer Perception of Tokenism and Diversity Marketing, Implications for Brand Loyalty. And to start with diversity marketing, it is a strategic approach that recognizes and celebrates the unique qualities, backgrounds, and experience of various customers groups. For example, we have seen a lot of advertisement that includes people from various categories, like from different groups and caste, where they represent to show a brand which will approach and which will reach a lot of audiences. And the core of the diversity marketing involves inclusive messaging, cultural awareness, and authentic representation. By doing the diversity marketing, the consumer will be aware of the product and they will have a proper knowledge about the products. And about tokenism, in the context of marketing, refers to the superficial inclusion of diverse individuals, a group without a genuine community. Consumers are more aware and they expect the brand to be in a particular way. As they are more aware of that, they will expect the product to be represented in a meaningful and respectful way rather than just for a publicity. This study aims to understand how tokenism in marketing affects customer trust and loyalty towards a brand. And the objectives. This will understand consumer perspective. Example, this will ensure whether the customers are buying it for genuine share or it's just for marketing tactics. And the second point is impact of tokenism on brand trust. Tokenism affects how customers trust the brand and remain loyal to it. And the third point, the study also explored people from different backgrounds, ages or culture, perspective tokenism differently. And the research methodology. Research design is exploratory research. Sampling technique used here is stratified random sampling. Population, we have taken from various students from various education institutions. And the area used over here is from north and south of Chennai. Sample size is 2 to 1, and the qualitative data is primary data, a structured questionnaire, and the quantitative data is we have collected from books and journals and government reports, etc. Analytical tools, percentage analysis, one-way and the limitations. Time constraints. The research has limited time frame, so only a group of people could be studied. For example, if there are two cities like Westmangalam and Nungampattur, during a particular period of time, only a particular area can be covered. And then misrepresentation response. People might give false information which could affect the accuracy of the result or study. The biased view of respondent. Bias happens when people give answer based on their personal opinion instead of being neutral. This can make the study unfair or inaccurate because their views may not reflect what most people think. And now, Geetana will explain the balance of the slides.
From the given data analysis, we can assume that 52% of female are given the analysis more than male between age group of 18 to 24 with a percentage of 59.7%. Their educational qualification is undergraduates with a percentage of 55.2, 57.50% are students, and 58.3% are residing in urban areas. From the bar diagram, we can assume that 15.7% feel more connected to a brand when it portrays diversity in its advertisements, and 45.2% said that they neutrally, that is, either agree or disagree when a company promotes diversity when it affects their opinion of the brand positively. From the above one way ANOVA, we can tell that the asymptotic value is less than the table value, that is 0.05. Null hypothesis is rejected and alternative hypothesis is accepted. Since there is a significant variation between the gender and perceptions of tokenism, and the asymptotic value are more than the table value, null hypothesis is accepted and the alternative hypothesis is rejected. Since there is no significant variation between the other demographic variables and perception of tokenism. There are few suggestions that are provided by us. They are to ensure that marketing campaigns and brand messaging reflect the intersectionality of race, gender, sexuality, and other dimensions of diversity. Brands should aim for meaningful and authentic representation rather than simply ticking boxes. They should continuously monitor and improve their marketing strategies so that they can satisfy the consumer needs and wants. They should continuously engage with diverse consumer groups, which help to understand customer needs and expectations from the brand. Brands should provide alternative text for images, closed captions for video, and design websites and apps with accessibility feature to ensure inclusivity. Finally, we conclude that this study is based on understanding consumer perceptions of tokenism in diversity marketing and its implications for brand loyalty highlight. Diversity marketing can be a powerful tool for building consumer loyalty. It must be handled with authenticity and integrity. I like to thank the conference committee for their hard work in putting this event. It's been a truly enriching experience. Thank you.
I have a question. What method did you use to collect the data? You found that you have been collected from north and south of Chennai, right? So, in which method you have been collected the data?
Questioners, two questions.
Through questionnaires, right? What is the method? Have you sent through Google form? Physical collections of data.
Both analytical and descriptive method.
Okay, thank you. Thank you.
Shall we have the next presenter?
Good afternoon all. I'm Tanusha and she is Manisha from SDLBC Vaishnav College. We are going to present our research on the topic exploring neuromarketing influence on buying behavior, a quantitative approach. Introduction. In today's competitive market, business increasingly leverage neuromarketing strategies to influence customers' purchasing decisions. Neuromarketing, which applies neuroscience principles to marketing, aims to understand how consumers react to different stimuli, such as emotional appeals, visual and auditory elements, celebrity endorsements, and scientific triggers. These strategies tap into subconscious decision-making processes, shaping consumer preference and behaviors. This study explores the impact of neuromarketing strategies across different demographics, including age, gender, and income level, to determine which tactics are most effective to various consumer segments. By analyzing the consumer responses, business can refine their marketing approaches to enhance engagement and drive sales. The
findings provide valuable insight on how different groups pursue and respond to marketing quickly, helping brands create more targeted and impactful campaigns.
Links for the study. This study is essential because it will help bridge to the gap of understanding how neuromarketing strategies resonate with the diverse consumer group. By examining which strategies have the most impact on different demographic profiles, business can optimize their marketing campaigns to target the specific group more effectively, with raising the consumer expectation and evolving the marketing plans. This research will provide the valuable insights to the consumer preference, enabling the companies to adapt the more personalized and data-driven approach to boost engagement and conversions. Moreover, in an era where consumer choice are often influenced by emotional and sensory experience, understanding the neurological triggers that drive this decisions is mutual. The findings from this studies can guide companies in the brand loyalty, customer satisfaction, and increase the market share.
Objective of the study. First objective is to compare the effectiveness of neuromarketing techniques with traditional marketing strategies from consumer perspective. Second is to measure the how different neuromarketing strategies, example emotional appeals and visual stimuli, affect the consumer preference and purchase intentions. Third is to assess the impact of neuromarketing on different consumer segments.
Literature review. Neuromarketing is generally used to objectively identify the consumer preference. The consumer preference or subjective individual taste. Taste is the like and the dislike and the predictions. When you are building or marketing a product, you target the customer. You new to the customer. Consider the personal preference to get the best possible result. Customer preference are defined as subjective individual taste, measured by the usefulness of different batches of goods. Another student showed the presence of celebrities or the people considered the physical influence in the advertisement activated under area to play the involved in the process of recognizing and building trust. Consumer behavior research invests the role of subconscious mind to consider the emotional habit. Cognitive responses has received the considered attention from academic and emotional and the cognitive responses industrial. They are comprehensive the analytical description of extensive studies in the significant in gaining the newer insight into the various implicated mechanisms of brain that govern the effect of emotional attention, memory, and decision.
Excuse me. Please stick to the timing. We have just 5 minutes, right, for each presentation. Time management is also a criteria for the next presenters as well. This is a highlight list.
Effective competency and clinical marketing technical marketing
Research methodology. Name of the study is exploratory research. Nature of the study is exploratory research. Sampling method is simple random sampling method. Sample size is 200. Data collection is through primary data, that is questionnaire through Google Forms. And area of study is Chennai and period of study is 6 months.
Suggestion. Emotional appeal brands should focus on the creating emotionally resultant the advertisement or product design their deeper connection with consumers.
Personalized marketing. Based on neurofeedback, personalized content to align with consumer subconscious preferences, increasing engagement and conversation rates.
Conclusion. The study will conclude that neuromarketing significantly impact consumer buying behavior, consumer substances, and the cognitive responses to marketing similarly play a crucial role in the purchasing decision. Thank you.
presentation.
First of all, I would like to extend my gratitude to the honorable judges, event coordinators, and my beloved audience. I am Sharmila Srinivasan and my co-author Suchita from Satyabama Institute of Science and Technology. We are going to present a topic in the name of the role of emotional AI in digital lending. This study focuses on how artificial intelligence assesses a borrower's behavior, trust, and ethical concerns in digital lending. Introduction. Digital lending revolutionized the finance industry, making credit more accessible. However, it trusts privacy and ethics, analyze the borrower's behavior and sentiments. AI emerging as a powerful tool in lending. Research gap. Why emotional AI? In traditional credit scoring method, they are focusing only on the finance. They are not considering the emotions of borrowers. In emotional AI, they consider the emotions of borrowers that emphasize the distress and loan defaults. Challenges, there are some of the challenges, data misuse and some of the challenges. And the objectives, we are focusing on analyzing the borrower's sentiments and behavior. Next, research gap. Focuses on the traditional credit scoring, ignoring the borrower trust and sentimental analysis. It focuses on the efficiency, not ethics. Demographic factors like age, education, employment, there is no AI in adaptations. No clear framework for the building trust in the AI-driven digital marketing. Next. There are theoretical framework. We have done the TAM and MFT. TAM is technology acceptance model. How people adopt the technology. PU means is AI improves the credit assessment. POU is lending user friendly. It is surprisingly it is not significant. AI undertaking acceptance and usability alone does not drive adaptations. MFT, fairness, trust and data privacy. The data which has been given by the consumers, borrowers have to be has to be not reinforced bias. They have to create a trust in the borrowers. Privacy, the data which has been given that should be regulated. Integrated model for borrower trust. Combines both the TAM and MFT. Ethical concerns matter more than the usability in the AI adaptations. Research objectives. Examines the borrower's perceptions of emotional AI in digital lending, identifying ethical concerns affecting AI trust, analyzing demographic influences and AI adaptations, identify borrowers and enables the AI-based credit evaluation. These are the research questions we have asked based on our objective. Then literature review. It involves the key factors, usefulness, ease, phase, ethical concern, borrower sentiment, underwriting acceptance. And then based on that, some of the research scholars have done research. On that, then we have taken 3 authors. 30% of consumer trust in AI chat box. 61% of Gen Z use AI in finance. 50% financial professional worry about the AI security. Research hypothesis. These are the research hypotheses we set to frame our methodology. Now let us take over to the research methodology, where the research design, like questionnaire, well-structured questionnaire of quantitative analysis and cross-selection services being used by collecting data from the publics using 3 forms and the techniques, statistics tests like chi-square and ordinal regressions and logistic regressions. Collection sources, like data was collected from the financial institutions and social media. Next one is sample size. We collected 1 or 3 responses by demographic age category. Majorities was 66% of 18 to 24 responses are collected. Gender, females dominate by 51.5% and education is 49.5% of bachelor was responses to them. And employment status for 50% 59.2 of students was responded. And next one is data analysis was descriptive structure. Frequencies distribution are being used for ordinal regressions. Ordinal regression PU and POC impact the AI underwriting, and chi-square for demographic impact on AI distribution, like logistic regression predictive AI based on credit scoring. These are the hypotheses where rejecting of null hypothesis and significations for 2. These are the data respondents of 103 responses were being collected and their responses and the questions. And finally, the key points were the interestingly 75.8% positive reaction to the AI, emotional AI lending, and 57.3 confident in AI for risk evaluation, and 73.8 believes that AI can detect a financial stress. And another important point is like 76.7% support borrower sentiment analysis for credit evaluation. 38.8% prioritize the AI for the risk borrowers. And next one is, moreover, there are more possibilities, there are more challenges and ethical to be faced. The challenges we collected is 47.6% worry about the data misuse, and 38.8% concerns about the privacy violation, and 52.4% believes that the AI reduced risk. Yeah, the solution for challenges was identified. We are providing the solution with explainable AI, but XAI for the transparency is more borrower sentiments or borrowers believe that the AI should be more transparency and fairness. And next is the conclusion. The main finding is AI the future research. Main key findings: trust over the sustainability and privacy fairness. Borrowers mostly insert the AI. They can use emotional AI in digital lending, but they try to give out transparency. Future research. This research can be for the future research direction. Explore lenders' perspective on emotional AI, and third one, develop ethical AI governance policies and construct long-term strategies. Another final, like AI have a potential, but trust, fairness, and transparency are critical, and the regulated advantages and bias mitigation. And this is the references being used. Thank you for your time.
Thank you. I now request Mr. Shankara Narayanan to present onto the stage.
Okay. So, good afternoon to one and all present here. I am Shankar Narayanan from JPR College of Arts and Science. And behalf of my faculty, Mrs. Sandhya ma'am and Divya Kemia. So, my topic is about based on the Fintech and analysis of rapid lending platform and customers experiencing Fintech adversity in India demonstrate. So, I just highlighting the upside. Okay, when the market grows more globalized, the financial industry will develop. At the same time, we people nowadays, by switching to the cashless transaction, it is a good thing. At the same time, India is promote the financial inclusion, and by promoting this, it will create many solutions. At the last few years, India is taking a range of outcome from that, and fintech innovation coming by the financial services, especially using digital technology. And sometimes the fintech technology is giving solutions by the digital disruptions. So this is our problem statement that India is seeing some significant challenges while coming to the business operation. At the same time, the IFS is not unique, and there is some changes happening in between the governing ordinance, and the Indian financial sector is consistently shifted to the Fintech because the problem is the IFS is not unique. At the same time, India is shifted to the Fintech pipeline. So this is the problem statement. So research problem. So the information technology is consistently evolving. At the same time, they're just having pair up with the IFS sector. And the Fintech energy, I think the 21st century is booming trend. At the same time, they just direct impact on the IFS. And by accepting the Fintech like our assets or while altering the operational business model, adapting user experience. It's because the Fintech is giving the user experience user-friendly and easily usable. And this is something, the digital reception is significantly increasing the efficiency of the financial institutions. Like coming to the theoretical background, the Fintech factors are driving support, like they are providing the cyber security to the people because we are using the UPI or Paytm. We providing the Fintech providing the perfect cyber security, and we feel very comfortable with that. And tech print on financial institutions like computing adaptability, disrupts and reshapes the current FA ecosystem, supporting the transition of digital age and relationship Fintech and financial institution. Like the financial institution serving as a big support to the customers or the market felicitation mechanism. So this is very good thing. And the financial stability and Fintech. Like they are always focusing on the customer happiness, customer preference, customer needs. So they just work according to the customer's point of view. So objective. Like the financial, the Fintech is, there is a big change in India. The Fintech was happening. At the same time, the Fintech is considerable technology innovation on a global aggregate level. Okay. So different phenomenon of a Fintech portfolio. So I already said, while coming to the cyber security, the Fintech is giving the 100% cyber security. At the same time, we feel comfortable with by using the Fintech. And crowdfunding, it also helped to the new startups or something business idea. They're giving financial advances by promoting the individuals to the next level. And customer asset management is nothing about, they always preference about the customer loyalty and happiness. This is customer asset management. And machine learning, like we can use our investment or research into various purposes, like it is coming to personal or social, we can use them as a trade by machine learning. The digital real estate, while coming to the digitization, the real estate business, the Fintech is taking the intermediate person and they just creating a space between the customer to the business in the direct interaction. And for the project contractors and real estate investors, they get benefited because without any intermediaries, we just have the conversation between directly to the customer to the business person. It will be benefited from that. We won't lose our money. So entanglement of Fintech in financial world, like it is sure that India is going to be developed by this Fintech, by using this Fintech. At the same time, the Fintech is more popular in the financial sector and it affects every aspect of the business plan. In some stage, it affects every aspect of the business plan. So India's financial sector business, like this is a common thing. Like if you want to start a business, we just obtaining loan from the bank and we just pay the debts. This is the first thing. And come to the payment we have both online and offline payments. If you're comfortable with online, we can pay in online, and if you're not comfortable with offline, you can also go further. And savings and investment, like if you have a business idea or if you want to start a business, the first thing you just get money from your friends or family or guardians, mentors. So this is a step. Otherwise, if you don't get the money from your friends or family, you just get the personal finance, okay, from the banks or markets. So the conclusion is, I think the Fintech is going to be the boom thing, and this is a tech trend in the current era. At the same time, we need to restrict the Fintech according to the business persons. Like there is an ethical value we need to create, As the landscape continues to evolve, both regulators and lenders must prioritize ethical practices. Okay. So transparency to build a robust and trustworthy fintech ecosystem in India. Like the overall is, the fintech is a good thing. At the same time, this is the tech trend, and in future, the fintech is going to be ruled. But in some cases, the fintech need to provide the right security to the people who are using that, and without providing the right security, then the fintech will be going to be launched. So that's the conclusion. So use the fintech in the right way, and use of rules and regulations. It's going to be useful. Thank you. Thank you for the opportunity. Fintech. Like ma'am, while coming to the UPI payments or Paytm, there is a situation happening between that. So that's why Paytm was created, and we people are, that time we don't think, okay, this GPay will going to be the future or not like that, because that time we are facing some issues like the demonetization something. But people, once they get using the app, they feel comfortable, okay, this is providing the right security to him, and without bank interaction, we just transfer our payment to the one-to-one bank without any saving time. So it creates a saving time, while future, if you want to transact some money or something, Bitcoin or cryptocurrency, you have the 100% security in fintech. So while cash, you don't have the security. Okay, sometimes there is a theft happen, but in fintech there is no theft. If someone theft you in the online way, you can find the criminal in an easy way. So that's why the cyber security is provided. I think little bit difficult, but we can access. Yeah. Thank you.
Thank you. I now invite our last presenter to the stage.
So good afternoon everyone. My name is Deepika and my team partner is Pratima Rao. We are delighted to present our paper on the topic Clicking Through the City, Gig Work and Urban Prosperity. We are gathered here today to explore one of the most pressing economic and social transformation of our time, the rise of gig economy and its impact on urban life. Introduction of the paper says gig economy is a free market system where organizations hire independent workers for a short commitments. Over the past decades, digital platforms have revolutionized the way people work, offering flexibility, convenience and new economic opportunities. But alongside these benefits, gig work has also raised concern about the job security, fair wages and urban infrastructure. So here are some review of literature. So here there is a definition of two authors, Sheryl Sandberg, CEO of Facebook, and Richard Florido, author of the Rise of Creative Classes. So the objective of the study is to create a platform where individuals can develop skills and talent in areas like technology, design, writing and delivery services. Then study income stream through freelance, part-time and remote work dependency on traditional employment. To identify underemployment by connecting workers to short-term projects or temporary roles that match their expertise. So the next slide is research design. So here we use analytical research design. We collected data through simple random sampling and data type primary data, a structured questionnaire. Sampling, so the study includes 146 response in Chennai city. The period of study was conducted in 3 months. So from here, my team member will take over.
Next, we shall move on to the percentage analysis.
According to the perspective of the analysis, the total number of the responses were 46, including male and female. The frequency of male were 80 with a percent of 54.8, and the frequency of female were 66 with a percentage of 45.2. So on the basis, we have got the gig workers working more male members than the female, and the research findings are that as per the respondents we have received, the age base were 20 to 25, and the salary the people were paid was 15,000 to 20,000. And many people have stated that they have also have income from the outside working of the gig working also. So next is the conclusion. So we like to conclusion as based on the theme of this conference, that is digital transformation in finance. Gig working is basically done through the digitalized methodologies. So we also found out that many are dissatisfied with the work and their income. So thanks for giving us this chance for presenting here, and I thank my teammate and the college for giving us this opportunity. Thank you.
I now invite Dr. Chelsea Dharmarajan ma'am for our online presentation judge on the stage, and I request our HOD ma'am to felicitate Dr. Chelsea Dharmarajan ma'am. I also request our HOD ma'am to honor the co-editor of the conference proceeding, Ms. Mahalakshmi ma'am, with a memento.
Thank you, participants. Now we'll have a lunch break and we'll assemble by 3:15. Okay. The results of the paper presentation will be announced during our valedictory ceremony. For the offline participants, the lunch for the outside participants, the lunch is being provided at main block. Our students will guide you. You will find your lunch token with the kit given to you. Thank you.
தேவைப்படாது